Well, the global credit insurers Euler Hermes estimate worldwide insolvencies will stabilise at about 300,000 cases, as 2015 marks the end of the post-crisis adjustment trend, but it does expect insolvencies in South Africa to increase quite markedly this year. This is the MoneyMakers. I'm Bruce Whitfield. Tonight, I speak to Greg Nosworthy, who's country manager for Euler Hermes, about the dire state of South Africa's corporate sector. But we'll get there in just a moment. I need to find out first, please, what the post-2008 picture was, because the banks, a couple of banks went bust, but there wasn't a great crisis of insolvency post-2008, was there, Greg?
No, that's correct. I think since the crisis 2008, insolvencies worldwide have continued to actually decrease, and they've come to a level now where last year there was a decrease of 4% only, and this year we're looking at a 0% decrease basically. So we're starting to reverse gears and it's starting to change. We're starting to look at more insolvencies happening globally. However, if you actually look at the pre-crisis period, insolvencies are still higher now than the pre-crisis period by about 3%.
Which makes sense. Otherwise, why do we call it a crisis? We call it a crisis because banks got into trouble, not many other people. Companies continue to operate at pretty much the same sort of rate as pre-crisis.
Yes, I think so. I think we need to divide the global market into emerging markets and well-established developed economies, of course. And those have got two different scenarios. The developing economies definitely will continue to decrease in insolvencies this year. Emerging markets, totally opposite picture. We're looking at a 4% increase, mainly driven by, well, China last year, 25% increase in insolvencies and another 20% increase this year.
Okay, I want to get to the emerging market story in just a moment and just keep the focus a little bit on post-2008, because I recall having maybe a 2009 conversation with Brian Joffrey, the best allocator of capital in South Africa, some say, and saying, are you licking your lips in anticipation of corporate weakness, of bankruptcies, of companies that are going to need a big brother white knight bailout? And he didn't quite salivate, but I got the sense that he was anticipating that it would really pose a great opportunity for Bidvest for expansion. And Bidvest hasn't seen that many opportunities even in the last 7 or 8 years.
Yes, I think there were a lot of opportunities post the crisis, etc. But times have definitely changed. Worldwide, the environment is totally different. There's an environment of deflation, high corporate debt, disruption to the markets with monetary disruptions as well as political shocks. And I think that's the environment we're operating in today.
High corporate debt as a result of benign interest rates for so long?
Possibly. High corporate debt rate, I think, has sneaked up on everyone. People haven't been aware that they're going to be getting themselves into so much trouble. But once again, the emerging markets is where the problem happens. And there are three common factors in the emerging markets, Bruce. And the one is that the high levels and the large current account deficits, number one. The second factor, I think, very much the vulnerability of the private sector. And the third factor, the highly politicized agenda reforms that are taking place. And these result in capital outflows, nervousness in the markets, and definitely increased credit risks.
I mean, you talk about China as sort of the leader in the world of insolvencies, 25% increase last year. You're expecting another big increase in insolvencies this year. To be expected, I would have thought.
Yes, I think what's happening in China, and similarly enough, it's starting to happen in South Africa, is that the day sales outstanding is increasing dramatically. And what happens there is that China are offering longer term credit to try and entice new customers, and in turn they are extending their credit terms with their suppliers, and that results in intercompany lending at the end of the day, which is an alternative for bank lending. So the market gets funding that way. But it's not healthy.
Well, it sounds a bit like African Bank, doesn't it? I mean, African Bank extended the terms of its loans and eventually African Bank went bust. We saw that happen in 2013. But or 2014, I think it was. Give me a sense, please, then as to what we anticipate in South Africa, which has been largely immune to the shock of mass insolvencies for quite a long time.
That's correct. I think South Africa is obviously affected by the global factors, and the global factors are the same suspects of the Fed rate hike, the currency fluctuation, the falling commodity prices, the slowdown in China. So that as global factors plays into South Africa in a very strong way. The factors are compounded with the local ongoing perhaps shortages and in output of electricity, uneasy labour relationships that are possibly going to take place this year, a number of factors which compound this.
I mean, who would have thought that at the end of 2015, once the biggest, most valuable company on the JSE, Anglo-American, would look vulnerable? Mark Kidifani taking extraordinary steps to restructure the group, suspend dividend payments in an effort to shore up the balance sheet and keep Anglo-American solvent.
Yes, it's been a total reverse. A couple of years ago, insolvencies were higher in developing markets than in emerging markets. This has changed over the past 2 years. The day sales outstanding, the global average is 65 days. This has dropped to 61 days in developing economies and is expected to run up to about 69 days globally for emerging markets. So the picture's changed and reversed completely.
Now, how much of it is as a result of a policy environment in South Africa? How much of it is as a result of a corporate sector that's really been caught with its pants down, self-inflicted?
I think it's a bit of both. I can't say that it's self-inflicted. There are a lot of global factors that are out of our control these days. However, I think South African businesses really need to look forward to taking opportunities, and there are future opportunities. Intra-trade in Africa is expected to double in the next 7 years with the establishment of the free trade zone. And I think South African businesses need to look for those opportunities positively.
But you are cautioning that we're going to see quite a dramatic uptick in business insolvencies. We've seen in 2015, for example, Everaz Highveld Steel put into business rescue. Steel producers worldwide are under pressure. More business rescue or more outright insolvencies?
I think the figures that we've been looking at are insolvency figures. And not necessarily business rescue figures that have been taken into account, which actually makes the picture look a little bit worse than we're actually mentioning at this stage.
So how bad does it get in 2016?
Yeah, I think it's going to be a tough trading year. Businesses are definitely going to be under pressure with day sales outstanding increasing. The pressures are all there.
Which sectors are most vulnerable?
I think construction we've already seen that. Last year, year on year, insolvencies increased 28%. Which is really high and significant. Mining related sectors, the steel sector obviously under huge pressure.
Okay, so it's industrial South Africa, despite the very best efforts of Rob Davies and his cohorts at the Department of Trade and Industry to bolster, with all the best intentions in the world, the industrial sector of South Africa. We're just not competitive enough.
I think in the short term we're going to battle to turn it around. We haven't even talked about the drought yet and the effect of the drought on South Africa, which is also going to play into the hands of more insolvencies.
I mean, and that's going to happen, I suppose, in sort of family-owned businesses in the farming sector, for example. The agriculture, agri-processing sector will be hugely vulnerable.
I think throughout South Africa, everybody is going to feel the pinch next year. Costs are higher, demand is lower, and there will be social tensions, I think, as well. Playing into this.
I mean, do local government elections matter at all in the scenarios that you paint, considering that just if nothing else, noise levels rise to fever pitch pre-elections, and this is going to be the first I suppose time the EFF, for example, fights an election as an established force. They fought a general election, they won 8% of the popular vote there, and suddenly going to local government elections emboldened, very much stronger position from which to work, perhaps.
I think it's all about business confidence and the nervousness of the markets, and that will play into the results of how it all pans out.
Business confidence, of course, plumbing multi-year lows.
Absolutely.
The signals are there.
Yeah, it's plummeting. I think the thing that's saving us at the moment, Bruce, is the oil price. Today I see it at, I think, $42.70.
Yeah, I mean, toward the end of last year, we saw the oil price hit those multi-year lows, 7-year lows in the oil price. Thank goodness for low oil.
Absolutely, thank goodness. I think going forward, businesses have to be very aware of the exposure in the markets. They need to protect themselves. That's where we play a role. We monitor over 44 million businesses worldwide. We monitor the insolvency risk and their credit risk, and we support our clients with regards to what markets they should be operating in and the actual exposure.
I'm assuming you're advising lots of your clients to look towards South Africa or not?
Clients to look towards South Africa. They are
global clients.
Look, we support a lot of multinationals in South Africa that are looking to expand into Africa, into Southern Africa as well, and the opportunities are still there.
But it does, with every crisis brings opportunity. And if we do see a spike up in insolvencies, South African corporate sector is cash rich. Companies are sitting on very fat balance sheets looking to apply that capital. Perhaps what we do need is it's a bit like a Jack Russell picking up a meerkat and shaking it by the back of its head.
Yes, I think we need to get rid of that nervousness, and we need to start trading with a bit of confidence. Credit insurance plays a very important role. We help companies grow their top line while we're protecting their bottom line. So we are able to help companies expand into various markets.
Now, what's it going to take to turn that confidence, do you think?
I think the shock of these insolvencies is actually going to wake people up and say we need to do something. We cannot continue the way we are. We need to have a change in policy, a change in thinking, and we need to become more positive.
Yeah, but what is the catalyst? The catalyst is going to be things get worse before they get better?
I hope not.
We all hope not, but in reality...
It's a possibility that things will get worse. I think in the short term it's going to be very difficult to stop the 10% increase in insolvencies, and the kick-on effect of that will definitely affect and put a lot of companies under pressure that will need to take action and change their policies.
Greg Nosworthy, I wish I could say you're wrong, but I suspect you're absolutely right on the money on that one. Greg Nosworthy, who's country manager for Euler Hermes, spelt in the same way as the guys who make the expensive tyres, of course. 2016 promises to be a tough year, with many of the hangovers of 2015 dogging South Africans, perpetually low commodity prices. The drought, of course, that Greg mentioned, is very much a persistent threat to the overall South African economy. We're looking for some good news stories. If you've got any, send us an email, please. We're desperate to get 2016 off on a brighter note. Till next time, good night.